All right, let's jump into things. Where we at? It's 10:20, 15th of August. So halfway through the month now, and a couple of big bits of data are popping out over. I said at the start of the week actually that this was going to be a big data week, and the week's not done yet because we still got retail sales coming tonight. We got U.S. business confidence, and of course you got the not the sort of data, but the headline of Trump meeting with Putin, which obviously sort of like we can sort of try and unpack a little bit as well. But first of all, let's just have a look at sort of what happened with the data yesterday. So a couple of bits and pieces moving through the day. We had Aussie employment data. Now, this is one that I follow obviously every month and that with it all, but just mainly, not mainly, but secondary, I suppose, just for the fun of it to see how badly they do because they just do so poorly, like so shocking. I mean, look at these sort of things here. They're like sort of 80,000 off here, 60,000 off here. Excuse me, sort of 20,000, 20,000, give or take a few. This is the first time in a very long time, if you look at the history here, that they've actually got it sort of relatively near the number. I suppose maybe back in April, like 24, they got kind of close as a Actually, no, they didn't actually because that's a -6, and they said it's +7. So as you can see, they just notoriously have no clue. But there's that great sort of saying, a broken clock's right twice a day. Well, that's what we're sort of seeing here, and let's get this back smaller. That's what we've seen, and they've actually got it pretty much right on the money. So no doubt they're sort of slapping each other on the back, giving high fives, and going, "Yeah, this is why we get paid." But so stronger. Look, it's moved in a positive direction. I think the big one that market's kind of looking at, though, I mean, you take both of them into account in that, but the unemployment rate coming down, I think, is obviously also viewed in a sort of positive light. This is the one that sort of like people are saying, look, if this starts to creep up, I mean, we've again go back to these numbers. You've seen sort of high numbers, low numbers, high numbers, low numbers. I don't think that's like again, it's pieces of the puzzle that you put into what are the central bank, in this case the RBA, going to be doing. And we've seen high numbers, low numbers, and it hasn't look. It's kept Aussie elevated, but it hasn't really changed things dramatically. However, sort of last month, with this number ticking up to 4.3 from 4.1, which has been very sort of notoriously stable for quite a while, that's got people talking. And this is the big one that sort of people say, look, should this come up towards 4.5, that's the kind of time that the market's going, look, we're going to be definitely pumping up the rate cuts. And obviously, at its heart, the rate cuts are not going to be good for sort of Aussie strength. So that's the kind of number. So this ticking down. What I mean, sort of this ticking down, the numbers, employment change actually sort of adding jobs and ticking up in line with expectations was obviously a bit of a positive. And we saw that with Aussie. Aussie off the bat, it just jumped, I don't know, 10, 15 points or something. Um, and then sort of hung around there a little bit, and obviously unwound quite significantly through the day. So I'm just having a look on another chart, 68 down to loss of over 1% from the highs yesterday. But this is off the back of US dollar running, and this is the thing that sort of I say constantly. Aussie doesn't really matter so much. Like it does matter for its local data, but it's not the be all end all driver. If the market wants to, and this is a perfect example of this, that if we have sort of positive local data, so this should be seeing Aussie strengthen up. If the market wants to buy US dollar, they'll sell Aussie. It doesn't matter that this happened like this. The only thing that sort of happened with this is basically that if this number had been bad plus US dollar strength, so I've done this a couple of times with it all, but just for the sake of it all, I mean, you can see the sell-off, bang, kind of thing. So you've got the sort of fact of your local data was okay, pushing it up a bit, US dollar strength. So it kind of like you add this to this, okay, it didn't go too bad. If Aussie data was bad, would have been that. So as you can see, this is a smaller mover than the US data, but it just would have added to the whole point, and we would have been sort of further down. Who knows? Maybe down here, whatever. There's no point speculating on where it could have been. But the point is that we had okay data, so it held up a little bit. But as you can see, as soon as they started buying US dollar, it didn't matter about that local data for Aussie. They just said, that's great, bang, let's sell this. Whoops, just while I'm on this, I'll come back and do the charts in a moment, just so we can be ready with that flip as that sort of happens. It's looking like it wants to come back down, and I think low 40, low 64s are looking good here. But I'll get to the charts in a moment. Where is that data? Yeah, so that was the big mover through Asia. GDP out in UK, they actually beat a little bit there. I was at the gym at the time, so and I was like, I don't trade the pound, so it's just interesting to sort of see how these other economies are sort of faring at the moment, because obviously, sort of like these ones sort of do plug in a little bit to DXY. So, and when you're sort of measuring US economy, these are the economies you're kind of measuring it against, the DXY sort of participants pretty much. But a little bit stronger sort of balance, so stronger data there. Trade balance obviously missing a little bit, but still no shocker one for it there. Had China data the other day, didn't we? Wow, look at that. This was the big one that I was highlighting. It's annoying because China and Japan, Japan not always, and China I guess not always as well, but they're the only two sort of currency or sort of currencies, countries, economies, whatever, central banks that have like tentative as their timings for some of these things. So you don't know when it sort of comes out. So you're sitting there waiting. I mean, this is not really a big market moving bit of data, but it's like, for instance, the BOJ, when they come out with their rate decision, that's tentative. And it's generally between sort of like, 12:30 and 2, sort of Melbourne time. But again, it's one of these things you're waiting, then all of a sudden, bang, it moves. So I don't particularly care for that kind of stuff, to be honest. I like set times with stuff. And this is why the whole sort of Trump tweeting things makes things difficult, because it can come at any time. And also why I don't trade oil, because people can bomb people at any time and get blown out of your sort of positions. But anyway, whatever. Back to the markets. Well, to the news anyway. Moving through, we had a little bit of sort of data out, nothing really of note through Europe here. And PPI, this was the big one that they were looking for. Unemployment claims came in, as I said yesterday. Look, as long as it's sort of stable in those 20s, it's not seen as too bad. But PPI, this is the one that the market was looking for, and this is the one that got US dollar up and about. Like, this is a big beat as well. And the PPI, as I say, like I think I've been sort of describing it wrong. So I've been saying, okay, the PPI is like the raw materials going into the thing, and that's not the case. So it was an incorrect sort of statement by me, but it's from the producers when they sell the product prior to markups from, like, the local vendors or whatever, and taxes and all these kind of things. So basically, sort of like, so like the example was that if they're selling, I don't know if bread falls into this. I suppose maybe that'd be part of the core or whatever. It doesn't matter. TB, whatever. So they're selling something for $100, and then the wholesalers. But I guess that's probably a better way to describe it. The wholesalers are paying a higher amount. So instead of paying $10 for their, $100 for the TV, they're paying $105 for the TV. Well, that's 5%, and obviously that's just for an example, but that's an increase there. And this is how it can trickle down to the consumer, because the wholesalers, they're paying more for that TV. Well, they're not going to absorb that stuff. I mean, look, maybe they could, but most likely they're not. And I guess this is where the tariff stuff would probably sort of show up a little bit more, because if they're paying more for the TV there, then they're going to sell it. They want to sell that with the same margin. Well, say you make 20%. So 20% over $100 is, obviously 120, and then 20% over, 105 is whatever that is, sort of 122.50 or whatever it works out to be. So, and then that price is up, and then obviously then that sort of makes the CPI a little bit higher. And this is why the market actually reacted so much off this number here, because we had CPI the other day come in sort of pretty much flat with it all. Actually, I have started using this one here, because this actually gives you a bit more of a breakdown of the numbers. So it gets a little bit more sort of in depth with it all, because you've got CPI here, and these are actually very different numbers than we saw come out on the other side. So through the other other platform. But for the time being, we'll stick with this one just for the sake of this. So we did see CPI headlines come in flat. So they're expecting to tick up and it came in flat. Okay, US dollar got whacked on that. But this is another one that they were looking for, and obviously, oh, sorry, where are we going? Down here, PPI, and this beat substantially. Like it's gone from zero, they expected a small tick up, they got a massive tick up. So that's a big beat to the top side there, and we saw US dollar really rocket off that. And the idea behind this is because, as I've said a couple of times, Powell is going on. They've got the dual mandate. I say the same thing every day, but this is what trading is. Well, at least the analysis side of it all. Powell's got the dual mandate, and it's the employment on one side and it's inflation on the other. No employment is showing cracks at the moment. Inflation's the last sort of little pillar that's holding it up. And by holding it up, I mean holding him back from sort of going, okay, yes, we do need to cut, because he said, look, the inflation is going to appear. This is it. This is the inflation appearing. And this is why the market said, oh, hold on, wait, if we actually are seeing this here, it's not as clear cut as we thought. So the market, like the way that there's a market sort of will look at these things, they'll look at sort of like, implied rates of basically the bond market and the yields. And they'll sort of say, look, there's a formula actually I looked up, I won't bother going into now, as to how they sort of work out the probabilities of how much the market has priced in a percent, like basically so their mentality towards the idea that they are going to cut. And with this larger print here, uh, there was a talk of a 50 basis point cut prior to this bit of data coming out. I hadn't really heard too much of it, but apparently, some people were sort of floating that idea. But 25 base point was pretty much a sure cut thing. 99% or something sort of priced in for it all. That's dropped off substantially. I think that's back to about 80% now. And you see this reflected in the US dollar and the DXY, and that's obviously rocketed back up because, as we know, if you cut rates, it's not good for the currency. So if there's a chance that they may not, well, people will peel off their positions, and this is why you get these explosive moves, because this is what's priced in. And then when there's a lower probability of that happening, well, people go, well, you know what? I'm going to peel back part of my position because, you know what? I don't want to be caught down the bottom when it turns out they hold. We saw this with the Aussie and the RBA, not this time, but the time before, and they, market heavily expecting them to cut, and they didn't. They held, and Aussie pumped up to the top side. And obviously US dollar is a much larger market than that. So this is why we got that sort of explosive move to the top side on that. So yeah, it was quite a sort of interesting little play there, which I'll get to obviously in the charts in a moment. Through the rest of it all, we had Trump talking again. Let's just pause this 1 second. All right, so yeah, just just check out sort of what Trump's talk was about this morning. Where we at? Excuse me. Yeah, so here is 3 a.m. He was sort of talking there, but from what I can see, and it seems there's general sort of consensus, just talking about the upcoming thing with Putin. That seems to be, I guess, going ahead. He's coming out sort of typical Trump sort of fashion of sort of like, we want a good deal, we want a good chat, we want a good talk, and he's apparently already trying to organise. Should this thing go well? So he's saying sort of like, you'll know within the first 10 minutes, Trump style, bang. You'll know within the first 10 minutes, which is fair enough, I guess. Like, you sit down, you talk with him. I mean, it's obviously a big matter in that you're either going to be able to tell this guy's sort of going to come to the party or not. You got the rest of the EU sort of going, oh, no, Trump, don't get played by Putin, don't get played by the rest of the EU. I think a lot of them are just like, pansies, mate. But I think Trump's a different league than these guys in terms of sort of actually going in and sort of talking tough with these people. So I think sort of like, it's all they're all meaning well and all this kind of thing, but I think Trump will do his own thing. Anyway, point is that if he has a conversation with him and it goes well, he wants to organize another conversation, another meeting with Zelensky straight off the bat. So as in, they're in Alaska now. He wants to sort of organize another one and get Zelensky over there to have another chat. So that'll be very quick movements with those sort of discussions. So should these things go well, Obviously, then they pencil in the next sort of talk. This is interesting because we'll see how gold may react coming into the weekend based off this kind of stuff. So like gold has been bought up into the weekends for the last couple of months and that. Like it's a pretty sort of thing. Like people are sort of hedging themselves in case sort of everything blows up over the weekend. It doesn't blow up, and then gold sells off come Monday in Asia. So it'll be interesting to sort of see if gold has that same sort of price action and movement coming into the weekend with this kind of big thing happening. Well, it's happening tonight. I don't know what time and that, but I assume at least Australia wise and that sort of tonight, Friday. Um, and then obviously, over the weekend. So we'll see how fast this sort of stuff moves, but that's certainly something to keep in mind. Moving forward through today, what do we have? We've got we've got a fair bit of China data coming out over here. So retail sales looking to tick down, industrial production looking to tick down. These two figures here. So should these come out in these numbers here, we may see a weakening of the yuan. Now I've been covering this. I mean, one's a pretty boring one to sort of cover, and I could sort of summarize the chart generally in about sort of like, a minute compared to sort of talking about some of these other things for about sort of, 10 minutes, 15 minutes or something. But, we have seen quite a strong yuan through most of the year. And it's not necessarily, it's the same sort of thing with the Aussie. It's not necessarily that the yuan's super strong, but it's just because US dollar's been so goddamn weak. And so if we start to see a little bit of sort of cracks forming over here, we'll see how the PBOC actually act towards this sort of thing, because this is kind of like, obviously, if this was, look, PBOC is a little bit different they act a little bit different to the other central banks, but certainly if you just look at this as a sort of fundamental idea, if your retail sales are going down and your industrial production is going down, you need to get those numbers up, or you want to get those numbers moving in the right direction. If we have a look at where this is at, it's still fairly sort of flat around here. Forecast always looking like it's going to go a bit slower, but surprisingly they always beat. So how far back does this go? I was about to say I bet they're mainly green, if anything, through here. Even these ones are beat. They beat every time. One time they missed, two times they said, what's out of the last 2 years or something? They've missed twice. Oh, yeah, what a surprise. A bit more of a sort of choppy stuff through here. Anyway, whatever. Point being is if these come in a little bit lower or come in line here, or even more if they beat to the downside, you, you may see a weakening in the yuan, and we may see that moving back towards 720. 720 is definitely the breakout level. We sort of tested above it the other week. It sort of decided to come back down and obviously back into its little grind phase. And yeah, so it's just tracking along sideways. But if we see US dollar start to get bid up across the market, and we see some weaker China data, well, that sort of opens the door for a breakthrough 720, and that is going to put some pressure on Aussie, which is already on its knees. It's also going to put pressure on gold, which is on its knees as well. So that's something to pay attention to with the yuan there. So that's a good indicator of sort of what you could see as a proxy for Aussie and also gold movement. Through the rest, we've got a couple of bank holidays over here. What have they got? Assumption Day. So they just had this. Maybe it's the weekend. I was looking to this. I was looking forward to it. I don't even know what it is, Assumption Day. But through the rest of it, retail sales. So this is the one that market's really looking for. And you're looking at retail sales coming in flat, core coming in a little bit slower. Same sort of thing. This like US dollar needs to be able to link together a couple of bits of good data, because it gets a couple of bits. It gets one or two, and we see the market go, "Hey, this isn't too bad. We could buy this," and then it gets something shocking, and the market is very touchy to sort of sell US dollar at the moment. It wants nothing but good data. You throw in a bad piece of data in the middle, it just undoes everything. It's like you can have three good parts and then one bad bit of data, and it'll give it all back on that one bad bit of data. So you probably want to see for US dollar sort of strength, particularly into the weekend, some stronger numbers here. Now, if it does beat, like, you've got to consider both sides of it. It's looking like a little bit of a cool down on the core, and looking a bit flat here. Just having a look in comparison to sort of what the averages are. Actually, you could probably put it on a graph, can't we? Put it on a graph. Can't open this up. No. Let's have a look at this. So, I mean, look, it's fairly stable sort of through here. Is at least a positive, but yeah, so in terms of sort of what we have sort of seen, it's pretty much within the margins. Um, but yeah, so if we do see this a little bit weaker, you may see a little bit of a pullback on that move that we saw overnight. So, and again, coming into this, and this is what I was saying yesterday, that the market will like position themselves based on the upcoming idea of what the expectation of the data is. And we saw this with PPI because it didn't wait for PPI data to sort of drop and then it moved. It moved well before it moved within while it was in European sessions. So it's definitely something we can sort of see. They actually moved a little bit in Asia session, then into European sessions. All right, so let's jump into. We'll start off with DXY because obviously this one really kicked back into gear yesterday. So let's get this onto the 4 hour or so here. So this is what we drew out yesterday. I said, look, this is the box. This is what's going to give us our idea. It was all tested out, came back in, and then obviously 9 o'clock, that 4 hour candle. That was the candle that we had the data drop in, and that's what bang got it back out there. So it really came down, tested the line down here, double bottom, gave a little sort of break and moved up here. This is a zone that we've had sort of marked out for, obviously, as you can see, quite some time as a level that the market has been paying attention to. And this is the thing. So sometimes it's like you look at these charts and you're like, God, it's so messy. How do you read these things? And I guess it's each to their own of how they mark their own charts. But, you know, at least having these things still marked on here, because I'm sure this is like a long-term level going way back to, I mean, this is going back to 2020. It was a small little zone support back down over here at 97. And now we're sort of seeing this hold. Once I actually get back to a viewable thing, we can see that obviously it held down over here. So let's go back. It held a lot down over here. Small little sort of resistances through here. A little bit of dancing around here. It was that bottom wick on this one here? What was that? That was probably like some sort of bit of data. It could have just been one of these kind of stupid candles that come out every now and then. Anyway, the point is that you know, this is a level that we've seen the market hold it at previously. This is two tests down underneath here. This time it's held it so far. So let's see what happens with the retail sales, because as I said, the retail sales probably aren't going to be something that's going to be, oh, undo and then keep on moving down. But certainly you want to see it above 98.70. Then you're going to start to see some people go, oh, crap. Oh, here we go. It's moving a little bit here. So we had a little bit of this sort of rising support, which actually highlights better on this other chart because it's a little bit cleaner. Look, a little bit overshoots, this kind of thing, but the general idea, and this sort of shows, you know, that's three higher lows. Well, 1, 2 high lows off that you know, July low, basically. Let's get back to what we're talking about today. So we saw quite a strong sort of pushback up from it all. That's fine. Look, Asia now, let the market sort of digest. Think about sort of, okay, do we want to take this higher? Do we just want to run with this thing higher, or are we just going to consolidate here? If we do consolidate, this is probably a little zone. I mean, if we do pull back a little bit, this is like an area that we could probably see a little bit of a pullback into before it moves forward. I don't think we're going to see a complete pullback down of this move here. Let's jump onto, again, smaller time frame here. As you can see, so dribbling back down over here as to sort of where the market is so far. Off its lows from yesterday, we're still up at the 23. So look, even if this sort of pulls back down here a little bit, I'd expect this thing to be bought up. This has got quite strong momentum, and it was quite a strong beat. It wasn't just a small beat. So we've got gold down on its legs at the moment. If that drops underneath, I think this could be the thing that sort of pushes US dollar a bit higher. But of course, you know, we want to see it break those highs that it put in last night. So this little zone through here. And that will be your sort of confirmation that we're sort of probably going a bit higher. So that's kind of what we're looking for here. So while you sort of got potentially weaker retail sales coming out, you know, I doubt you're going to see this thing break even if it does sort of decide to squeeze up. So it kind of means that sort of like if this moves up over here, most likely we'll see it sort of sell back down a little bit like that. And then we probably look for some sort of consolidation through this area here. That's probably the best bet that I'd be saying. Look, you can certainly still trade this 100%, not this directly DXY as a barometer, but you know, the US dollar strength through the market, you can certainly still trade this area. It just sort of means if unless we get this solid break moving out to the top side here, which I don't think we're going to get, certainly not sort of prior to the retail sales, it means if we see a little bit of US dollar strength, particularly for instance now if it comes through Asia, then expect a little bit of a pullback sort of through European session. So time to sort of take profit as you're moving into these kind of areas. If you're short Aussie, short metals, these kind of things, if we do see those run together. But yeah, any sort of pullback down here, even sort of back down to the 38 here, that seems to be a fairly decent little level. It was the highs. If we drag this back over here as well, we can see these were the highs through this area over here. And obviously 38 and a little bit of this sort of support on its way up through this yesterday. So yeah, any sort of pullback down here, I reckon this will sort of be bought up, and then this would be kind of the area you're sort of going to see a little bit more direction. Now, as I said, there's a lot of moving parts with this, but the retail sales, consumer, I didn't even cover actually. Let's go back to this 1 second. Consumer sentiment. This is another one that we're looking at to end the week off. Of course, beautiful 12 o'clock on a Friday night. Slight tick up over this here, and also inflation expectations. For some reason, they don't give I suppose there's expectations, so they can't do a forecast. That is what it is, the expected number. So if this comes in like stronger, has this been revised? Yeah, so this has been revised up, and consumer sentiment up. So higher inflation expectation, obviously strong positive for US dollar because less chance of cutting with higher inflations, as I've covered a little bit in already today. And also if the consumer sentiment's up, well, you know, they're positive numbers for US dollar. And this is why I don't think we're going to see the US dollar sort of break down or anything too much prior to this data, because yes, retail sales are looking a little bit weaker, but you've got the momentum of yesterday, plus you've got some sort of positive data coming out. And then on top of all this sort of stuff as well, another sort of cog to throw into the mix is the Putin conversation. And last week, when was it? I think it was here. Actually, it definitely was here because you remember sort of having this support line here. When there was the first mention of Putin and Trump talking, look at how the market reacted to US dollar. And if you drag up gold at the same time, I'll show this. If you drag up gold at the same time, you can see how gold, whoops, not that one. Put gold over here. It was up. Where was it? This is riveting sort of stuff here. Here we go. You can see the corresponding candle over here because these little dotted lines line up, so it shows you the same time. This is how gold reacted at the first mention of it. Gold just dumped. Yes, it sort of dribbled back up over the top, but I started shorting around this area over here because this is when we had the gold futures go to all-time highs. Spot failed to do so, and I said, and the spreads pushed out. I titled that video. I said sort of like, watch these spreads, because last time this happened with the spreads, we saw a strong sell down, and look what's happened to gold since. It's dropped off 98, dropped off $60, 2%. So point being is that sort of like, should these things go well, so to speak, over the weekend with Putin and Trump, that could be, that seemingly is dollar positive. We saw the market, they're going to talk, bang, let's buy the US dollar. Things go well, bang, buy the US dollar. Things go bad, probably, sell the US dollar again a little bit. You have to sort of factor these things in. But again, it's just something else to sort of think about through the weekend. So we've got consumer sentiment coming up, which is positive for the US dollar, expected. We got retail sales flat to slightly down week for US dollar, and then you got the Putin conversation. So I think with those sort of three factors, we should at least sort of see it stay elevated off the lows here for now, coming off the back of PPI overnight. All right, now onto Aussie. And Aussie, as we can see, this is so where were we? We were about here yesterday where I did the analysis, and I said, look, this is a line that I've been tracking, moving up here the whole time. This sort of recovery channel, and we saw it test it, kissed it perfectly, and bang, never looked back. Get onto the lower time frame, we saw even in this last sort of push up over here that this is obviously coming up. And look at this, actually, if we line this up as well, that's pretty much perfect smack on the bang of this is your recovery here. And boom, we saw this come back down here as well. Now, that's just the technicals. The reason why it sort of obviously came back down is because we saw US dollar start to get bought across the board. But this is my point that I was saying, that sort of like, Aussie had strong retail sales and market said, yep, that's great, let's buy it up. It doesn't matter. They don't care. Like, yeah, you got slightly stronger. They weren't sort of super numbers. I mean, we saw 80,000 the other month, and the market really did do a great deal. But they said, look, unemployment down. That's strong local data. If it has to go into one of the two camps, it's strong for the Aussie. It held up here for 2 seconds, and then bang, smack down afterwards, and that's because the market will be very happily sell Aussie dollar, given any sort of chance to sort of buy US dollar. Like, it's just like I used to say, it's sort of like that's its favorite pastime, just sell an Aussie dollar. So I think Aussie is very susceptible here at the moment. It came back down and sort of held the support right to the money. This is the lows that we had. What was this, just last week or something? I think a couple of days ago, Tuesday this week. So bang up here and then very quick down. So it's definitely a line in the sand that we want to sort of see, should they break here. And I'm going to relabel this I'm calling major supports. Look, there's obviously other bigger major supports down there, but I would say should you break down here, you're looking straight move down to the 50s. Underneath the 50s, this is your major one, sort of coming down. Whoop, no, I can't remove the alerts. This is your major one coming down the 420. So under 420s, it's good night for Aussie, and we're probably going back to 62s, in my opinion. But at the moment, bang, it's held support. You got a little dribble of a bounce. Let's see what they do with the US dollar. As I said, there's a couple of little factors in that. If we see US dollar sort of dip down a bit, obviously you'll see Aussie come up. I'd say any sort of move up into 65.18, I think that's where you'll probably sort of see some selling come back into the market if it does even get up to that level there. But I'm not buying Aussie at this point. I'm still looking short for this. So I'm looking for a continuation of this move being basically leg one, leg two. I want to see this test these lows over here for potential breakthrough and sort of come down even further down there. And I think that's going to be on the cards. But obviously, these things will happen when they happen. And Aussie has been one that has been stubbornly strong on all these dips for a long time. So we'll see how we go. But certainly at the moment, just tearing off shreds where I can, because that's a lot more profitable than trying to find these home run hits kind of thing. I mean, the amount of people that sort of been shorting these things, stopped out shorting, like, or even sort of, if you're long, I mean, long at any of these points, you stopped out. Like, who's making money that's just buying and holding through this area? No one, because you're putting in higher highs, you're also putting in lower lows. It's chopping out everybody. And that's the thing, sort of when you get these things, these megaphone sort of patterns, that's what the market's doing. It's chopping out everybody. It's chop out longs, chop out shorts. So, what we do is we trade the insides, we trade the smaller sort of technical patterns, and take the wins where we can. But yeah, certainly I think sort of underneath 80, we're going to see a faster move down. We're looking down to sort of a 30-point move down to the 50s. So let's actually just update that as well. Let's just say it's called midterm supports targeting 50s. I'll look to sort of ride that one if it does sort of come back down under there. We're seeing a little bit of a push up now in US dollar, a little bit of a sell off. All right, so move along. We've got gold. So gold, yeah, certainly taking a smack here. Put in a new low technical, but as you can see, it's a little bit of a bounce, It's looking pretty sick though. And technically, you kind of got this little bit of a bear flag, like it kind of dribbled sideways into this. So it's a bit of a tough call for it all, but certainly you can see that this was a nice little support, lined up perfectly, symmetrically with the highs, which I always like. I always appreciate a sort of nice matching lines. We've got the retest of the underside, and then bang, lower low. So in theory, this is definitely still in the sell mode. We've obviously got a fairly decent little support in this area here where buyers are sort of thinking, whoops, buyers are thinking, come on, let's just hold this thing. But the way you trade this is you look for the absence of the buyers at this point. You know, we've got a fairly decent bounce off here. I mean, we went from 30 back up to 75. We're back here again. This little bounce only got up sort of $6 or something, $10, and we move over there. So look, it's not necessarily breaking down yet, but you would look for at least a move down to 33.07, which would sort of give you completion of this sort of little bear flag, in my opinion, sort of short to medium term. And then once you're doing that, you're coming back into, jump onto this other chart, should you get back down underneath there, these are your major supports. These are the ones where the market has really said, hey, let's buy this thing up. So you got to look at it again. And this is what I said the other day when I was covering this. Put it on the 4 hour so you can see, break of structure, as in, here's your range, lows, highs, lows, highs, lows. This needed, or still does need to, get up to the touch here before coming back down over here. A move to 33.07 isn't necessarily going to get you back down into this area, but it puts it very vulnerable to sort of see that it's moving over like this. And the reason that it's important is because you can see this is where the sellers were. This is the price. Like, you're selling your apples, I'll sell my apples for this price. Next week, all right, let's put this as sellers. Do I not have it in here? Sells. Sell zone, whatever. I'll take a little bit less. I'll take a little bit less. Why are you taking less? Because, it's going to come down here. Then any sort of rally comes up to here. And then eventually it just goes boom. And you sort of see the resolve of these buys just go same sort of thing on a larger time frame as what we're looking for this little point now is, you look for that absence of buyers. Once we said that the buyers just go, hey, you know what? I don't want to hold it. I don't want to buy it here. I've got a better shot of buying it down here, better risk reward. That'll drop down. And it's the same thing with price structure on all time frames. So you go to the larger time frame. This is the big area here that they're holding. This is the big area that we've seen them hold. Obviously, higher time frame, you got a $50 sort of swing zone through there. But the point is still the same. It's, you just want to see, is the market going to buy it in this area down here again, should we come to that test? And I think that's going to be put to the test soon as well. So I'm still looking sort of short on gold here. As I said, I'd like to see the lows get taken out. I think if you go underneath sort of 30, you're probably looking down to so around that sort of 33, 33.8, 33.10, that kind of zone down over here. Move along, we had silver. So silver, this is one that I was like, look, it's looking more constructive. And look, technically, you are still putting in higher lows, but as I said, I think sort of like, silver will sort of follow suit with gold. So if we see gold come down, this has got a little bit of a support coming through here. Let's make it, actually, I could say that color. If we see gold come down, then I think this could obviously break down here a little bit more. And I think, honestly, like I'm a big sort of advocate for the idea that US dollar will start to get bid up soon and bid up probably quite strong. And I think once that happens, I think a lot of these markets are going to be shook. I put a post on X last night because that's what my belief is. Could be right, could be wrong. Who knows? Who cares? It's well, I care, but I don't care what anybody else thinks about it because that's my sort of feeling for it all, and that's what I'm trading towards. And that's the whole sort of point of it all. But this is the kind of thing. If we see silver come back down and we take out these lows here, then you could be sort of looking at least sort of back down to sort of 36.40s. So underneath 37 or 37.40 down to 36.40. There's a decent $1 move, which would be about 3% from here down to here. 40. Whoop. Yeah, about 3% or so. So that's definitely a sort of a tradable zone should you come back down underneath here. So let's 36.40. Well, C640, make it on the 640. Put it on the safer side. That's obviously not. What number is this? 34. 34. Should that move there? I mean, that does kind of look like it wants to sort of dribble little triangle coming into it, move back down over here. So at the moment, looks like a little bit of a sort of like it was setting up to a little ascending triangle, fake out, and then boom, price smacked very hard there. I haven't traded silver quite a while, but structurally it seems to be working a little bit better more recently. We have copper, and copper is still in kind of in its zone at the little channel that is sort of grinding up through here. It was this nice little sort of triangle breakout from last week. Back test, boom, high, but this lines up very well for me. Again, I don't think we're going to get a bear flag with a measured move the same size as this pole. I think that was a bit of an outlier, but I do think these are the levels that I want to see. Yeah. Whoops, not that one. Yeah, and then see what happens if we move down under here. So certainly, as I said, any sort of move up, I expect this thing to be sold into. At the moment, it's just dribbling through this channel. So, yeah, you need to break these lows, obviously. That's sort of 436, but they're the two zones that I'm looking at underneath. But certainly more sell, sell for now. Gutsy. It's not even gutsy to buy it down here. It's just sort of like, it's a waste of time. Opportunity cost while you're sort of waiting for this thing to dribble up a couple of percent. Like, look at how fast it moves when it wants to move, and now it's just doing nothing. So I imagine any time it gets up to these levels, as I've said every day, I think the market's just going to go, yep, cool. I bought it here. Now I'll get my money back and move on to something else. Bang, move down here because they were looking for some spark sort of V-shaped recovery, which we've seen a lot of this year. And finally, China. This is what I was talking about here. So we came down, we tested this lower zone, found support, pretty much. Let's get on to, you do this on the higher kind of zones here. We've seen the market buy it up over these levels over here. Bang, they bought it up here again. So again, this is what we're looking for a downside move. This is what we're looking for a topside move. That'll give us our direction back into this previous little box that we had. Little overshoot here, and then back into its grind box. With these sort of things, not that I cover this too much, but this kind of move here typically can sort of be almost sort of replicated when you get a move outside and you see this kind of move here. So little counter swing move, so to speak. And that's pretty much what we saw with it all. But I still think that this outside this box here, so above 720 is the move. I think if US dollar strength comes across the board, as I speak, it's actually getting sold down a little bit, but as I covered earlier, I think a little sort of push down is going to be brought back up. That's fine. But above 720, I think that's the time that we start to move a little bit more. We've still got that gap to close as well, for what it's worth. All right, that's it from me.